Good morning, everybody. This is Patrick MontesDeOca again with the Equity Management Academy live trading room. I'm sorry about some of the tech issues we had this morning, but we're back live here. Welcome. Welcome to a new week. We have a lot of excitement going on right now with gold up $6. Major reversal taking place. Huge buying coming into the market, 1798 last. One of the things we're going to do here is take a look at the latest report that we published in the Associated Press and see what it is that we're looking for the rest of this week. But we got some fast markets here in gold and silver here, so let me deal with the real market conditions that we're in right now and see what's going on here. We have activated in silver, obviously, some major signals here. We recommended our traders to buy into this reversion here that we saw at about 23.47, I believe, was our entry point. I make a point of showing my trades live here in Discord, my private trading room. We're long at 23.47 on the silver, so it looks like 76. You want to trail this signal with a stop. Anybody in my Discord trading room or anybody following the signal here, you want to trail this with a stop right away. And in a move like this, you can use your trail stop on the low of the previous bar. In this case, would be around 23.65 and continue to trail your position. I think we got a major reversion unfolding here. On gold and silver. And I want to take a look at some of the digital assets here that we're carrying as well. So let me we got a new radar screen. We're updating the radar screen, so bear with me here as we continue to adjust the market to give us the instruments that we want to see and trade. Bitcoin is up 430, slightly up about almost a point, about 3/4 of a point. GBTC is up 65. Let me go back here to the gold market as we seem to be breaking out. Let me do a little bit of technical analysis here before we take a look at the codes. The first thing that we want to add to a basic chart is the Bollinger Bands, which give us an idea of the support and resistance levels. Let's add some trend lines. And I want to add a couple of more indicators that are built into the algorithm. Let's take a look at the RSI. And one more. Which is the MACD. Okay, so now we have a technical picture of where the market is, and we can see the trend lines where the market is in relation to those trend lines. And we see a pretty bullish picture here, or holding this support in the 1798 area. What we want to see is the market get up to about 1795. We take a look at the 15-minute. We trade the 15-minute bars for those that are just joining me here. And we use the close of the 15-minute bar to activate our signals. I want to go into the latest report that we published here in Seeking Alpha, and I want to share that report. This is the Equity Management Academy Weekend Podcast for September 12, 2021. Inflation. It's not going away. It is not temporary. Summary. The U.S. Producer Price Index came out today, increasing more than expected. Materials shortages, shipping bottlenecks, and increasing labor costs have increased producer prices, further stoking consumer inflation. It is a challenge to dissect and analyze what's going on. Looking for a helping hand in the market? Members of Mean Reversion Trading get exclusive ideas and guidance to navigate any climate. Fundamentals. The U.S. Producer Price Index came out recently, increasing more than expected. The PPI increased in August 0.7% from the prior month and 8.3% from a year ago. Materials shortages, shipping bottlenecks, and increasing labor costs have increased producer prices, further stoking consumer inflation. With such news, it's puzzling that silver and gold are down. We are looking at a higher level of inflation expected. It's not going away. It's not temporary. We have wage price inflation. We have monetary inflation caused by the flood of stimulus from the government, which is weakening the U.S. dollar, decreasing its purchasing power. We have price inflation due to the supply bottlenecks. We are also seeing wage inflation as companies must pay more to hire and retain workers. We are probably going to see even more inflation on all fronts. It's a challenge to dissect and analyze what's going on. China puts out so much propaganda. Other governments are far from reliable sources of information. News that should cause precious metals to rise do not. Therefore, we rely on technical analysis to show us where to trade the markets. Gold. Gold is down about $3 to $17.96. Silver is around $24.17, unchanged. The markets have been choppy. gold appears to have settled into a major area of support. The variable changing price momentum indicator, VCPMI, provides daily and weekly signals which we compare. The daily VCPMI average is 1795 for gold. The market came down to the weekly mean of 1790 and then reverted from there, but could not hit 1805. It then went back down to an extreme below the mean, 1787, which is an area of support. On a weekly basis, gold is extremely oversold. It also tested the daily level of support, activating a weekly buy trigger at 1790 on September 9. We seek the highest probability day or swing trades. We use the VCPMI to identify the highest probability trades by identifying the market when the market is at the extreme above or below the mean, daily, weekly, and monthly. Around the mean, the market has a 50-50 chance of going up or down. At an extreme above or below the mean, the VCPMI identifies where the market is 90 and 95% likely to revert back to the mean. Those levels indicate the highest probability trades. The daily VCPMI average price of gold is $17.95. Gold trading above that price has activated a bullish price momentum. Since gold is trading around the average price, you should not trade there. Wait for the extremes. For day trading, there are no day trading signals for gold. We are bullish the market long term. We are waiting to see if gold goes up to 1805, where we will take profits. We want to see the market back at the yearly average price of 1810. If we close above, it will activate the annual target of 2150. The 360-day cyclical bottom is upon us. As we take a look at the 360-day cyclical pattern from October 4th, 2020, report published on Seeking Alpha, it appears that the cyclical bottom came in about 12 days earlier. The market came down to the annual simple moving average of 1771 and reverted to close above the annual mean of 1810. It is still within a range to complete the annual pattern a week earlier or a week later. The initial confirmation that this bottom is in place is a rally from the current levels of about $30 to $40 initially, or a close above 1810, activating the annual targets of 2164 to 2442. A test of the resistance at these levels into September 14th, 15th of this month, and subsequently a test of the current lows into the 28th of this month would be a perfect picture for the next 2021 annual bottom pattern to be completed for our next calendar year beginning September 28, 2021 to September 28, 2022.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, imatotrade.com, or listen to any of our previous episodes.
Let's take a look at the real market here this morning. Today, right now, gold is trading at $1899.10. Very, very strong market unfolding for us here. And I believe that this is the expectation that came in as we looked at the weekly VCPMI coming into this week. We're going to be looking at about a $30 move. 1810 is the target that we're looking at. And it looks like we headed in that direction. So continue to, if you are trading in the futures, continue to trail your position with a trailing stop. And I think we headed in the right direction. if you're doing multiples, you can use the levels above to take some profits off the table. The target, the buy signal came in for silver at about 23.4750. The first target was 23.57. It was completed, and the main target at 23.96 is active. That is the next target. And if we're looking at trading closing above 23.96, we're looking at about 24.14.15 as the target here for the day. Let me take a look at the weekly reports that are produced essentially by the AI, the VCPMI AI, or Nikki the robot. Bear with me, please. Let's watch the market here. The momentum is driving silver towards that 24.14 area.
Hi everyone, this is Equity Management Academy with the weekly silver report for September 10, 2021. Summary. The weekly trend momentum of 24.55 is bearish. The weekly VCPMI of 24.14 is bearish price momentum. A close above 24.14 stop negates this bearishness neutral. If short take profits 23.38, 23. Trading instructions. Weekly trend momentum 24.55 bearish. The silver futures contract closed at 23.90. The market closed below the 9 SMA 24.55 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum 24.14 bearish. With the market closing below the VC weekly price momentum indicator of 24.14, it confirms that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish signal to neutral. Weekly price indicator. Exit. Longs, sell 1, 24.52. Sell 2, 25.27. Exit. Shorts, buy 1, 23.38. Buy 2, 23.00. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 23.38, 23, and go long on a weekly reversal stop. If long, use the 23.00 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the 24.52 to 25.27 levels during the week.
Okay, so 24.14 is the moving average that we use the simple moving average that we use, and the market trading below there obviously is in a bearish, what we call, it's in a bearish price momentum. It's the mediator, it's the equilibrium of a price, and what it does is it gives us basically the trend momentum. Okay, the trend momentum is different than the price momentum. The trend momentum basically is the volatility of the market, and the 2414 level tells us basically that the trend momentum for that market for silver right now is in that 2414 area. Now, trading below it activates a bearish trend momentum. Now, I look at it because I want to see the price in relation to the momentum. Now, the VCPMI is the mean or the equilibrium of the market, and the market trading below it activates the levels below of the extreme below the mean, which are 2338 to 2300. Trading above that, it activates 2452 to 2527. So the first target that we have basically for the silver market is that 2414. And if it does trade through that 2414, then we're looking at activating the higher levels, the higher fractal in price. We got a very exciting market here developing. Continue to hold your bullish long-term positions and use any of these corrections that we see into this 1800 or the lower of the 1800 to add and accumulate positions. Thank you again for the opportunity to share this with you, my friends. I sincerely wish you the best of this week. Good luck. Take care of yourself. I'll talk to you soon.